This episode of Your Money and Your Life is brought to you by our partners, Compare the Market and Term Plus.
Coming up on Your Money and Your Life, the latest scams retirees and investors should look out for. The cost of climate change on home insurance and ways to save. When is the right time to ask for a pay rise? Plus, Kylie Gillies gets a check-up on her family's health insurance bills. G'day and welcome to Your Money and Your Life, the show that's all about helping everyday Aussies keep more money in their pockets. Today we're kicking off helping a very special guest and her two adult sons, something all parents have to keep in mind. You know Kylie Gillies from The Morning Show, but to her sons Gus and Archie, she's mum. As the boys get older, there are a lot of questions to consider about health insurance. With the help of the team at Compare the Market, we gave Kylie some pointers. Kylie, good to have you on the show. You're in the same position as a lot of Australian families where you've had the kids under your health cover, but the boys have now grown up.
They're living their own independent lives, but yet still at home. And so therefore still under our cover, I think. But I had to check because Gus, our eldest, turned 21 and we had the new healthcare card turn up. And he was suddenly missing.
Right.
So I had to ring them up and go, why has Gus suddenly disappeared off it? And they, he's 21. I went, yes, but I thought kids were still covered.
That is interesting because a lot of private health insurers do cut children off at 21, although a lot of others allow them to be covered till 31 if they're a student. It's important because it's a big saving for them to help them
100%.
if they come under your cover rather than go out and have to get their own. We looked at your private health insurance cover. You've got a really low excess, $250.
Should I up that maybe? I don't know.
Well,
we probably haven't looked at that for years.
No, well, the average, a lot of people are $500, $750, and that has a really big difference on the premium that you're going to pay.
I knew I liked you for a reason.
So have a good... And obviously, we're just talking thought starters. You and Tony have got to go through, and Tony's got to plug it into a spreadsheet.
Yes, that's right. It's just something that we wouldn't have thought about lately.
Yeah.
Because it's just was there probably at the start and we haven't probably ever revisited it.
Another thing that probably you haven't thought about, included in your cover, you sitting next to Larry all the time, but you're covered for hearing aids. Now, I'm not sure... Larry's screeching at you. You may need a hearing aid.
Is that an opt-in, opt-out thing, is it?
Yeah, it is. Every inclusion comes at a cost.
Well, that's just ridiculous.
So look at the menu of what you're covered for.
Sorry?
And tailor it.
You've always preached to us about loyalty and that we really shouldn't have loyalty in this space. I know. Having said that, I'm with this same insurance company that I've been with since I started work. I started work as a journalist, cadet reporter in Tamworth when I was 17.
So you started with this private health insurer when you were 17 and you have not moved from it.
Can I say this is where I get scared though, and I think I speak for most people in my age group, is that I don't want to start mucking around with it.
Right.
And then suddenly find that next week I have a fall and need a hip replacement and like, damn, I shouldn't have, if only I hadn't have changed.
Sure.
Because there is, I think, in most people, a fear that once you change, you might be giving up something that, you know, Murphy's Law, I'll need in 2 weeks' time.
Well, it's not about giving things up necessarily. It's just getting value for what you want and cover. And remember that private health insurance is community rated. So it doesn't matter if you go to an equivalent policy somewhere else and you've got a medical precondition or whatever, and you think, oh, gee, if they learn about that, my premium's going to increase significantly. It's not. You're community rated like any other 25-year-old mum in the community, no matter what you've got. So there shouldn't be a fear about changing. So, look, what we've solved here is, yes, the boys can be under a policy. You don't need a hearing aid from Larry anytime soon.
No.
And just double check you're getting value from this policy that you've had since you were 17.
Worked in radio 2GM in Tamworth as a cadet.
Mike, okay. There
That's not good.
could be a few $100s on the table here.
Yeah, I'd love it. Thank you so much, Money God. He told me to call him that. I'm sorry. Is that...
After the break, how financial advisors can help protect you from fraud. Welcome back to Your Money and Your Life. Now, hundreds of thousands of Aussies are scammed out of their money or personal information every year. According to ScamWatch, we lost nearly $319 million last year alone, and I reckon that underplays reality. The bulk of that figure from investment scams. Email was the most common way scammers contacted people, followed by text message and actual phone calls. They'll try to trick you by pretending to be from trusted government agencies or financial institutions promising big returns. So how can you avoid falling victim to a financial scam? Joining me now is financial advisor Naomi Rosenthal from Professional Wealth Services. Naomi, scams are almost plague proportion at the moment. How do you identify them?
It can be hard to identify them, Koshi. Thank you for having me again. You have to look for the red flags. And I think the first thing is to be informed.
So what are some of the ones doing the rounds at the moment?
Well, as you mentioned, government departments. So we had a client who somehow their ATO accounts got hacked, the bank account details got changed, the scammers put through false tax returns, and the government actually paid refund money to the new bank accounts.
Wow.
Yeah.
But you get a lot of retail scams now, don't you?
Oh, yeah, they're fun.
And technology scams.
And a lot of those retail scams flow through social media, Facebook, Instagram, and they'll put up ads. 90% off at Rod and Gun, as an example. And you'll click on those links, but the link will lead you to a fake website.
Right.
It looks very much like the real website, but there are some things you can look out for. What is the email, the web address? Does it have the little security symbol up in the left-hand corner?
Now, the security symbol is the padlock,
The
isn't
padlock.
it? Always
yeah.
look for the padlock.
Always look for the padlock. Does it say HTTPS rather than just HTTP? Is it a secure website? So
Right.
look for the padlock.
Okay.
And yeah, they will look exactly like the real website, but they're fake. So you'll go through, you'll purchase, but your credit card details are now captured and you don't end up with any goods.
Okay. How do financial advisors help, or how can they help, particularly, retirees who don't understand technology as well as the younger generation, who, mind you, still get caught in the scams as well because they're so used to buying things online? How can they help?
The role we play is really to be a defence between what the client is wanting to invest in and where it gets invested. It's mostly around investment scams, but we can't always stop our clients doing things that we don't know about.
Yeah.
So we always educate our clients around, if you're thinking about investing in anything, come and talk to us first.
Right.
We had a situation the other day where we've got a client who's in the film industry, so quite knowledgeable in that space, and a producer approached him and said, I've got this thing going, would you like to invest in it? A certain amount of money. It wasn't a huge amount of money, but just, want to invest in this film production that they were going to embark on. And the client rang our firm. We had a conversation with them. Then we did some research. We looked into this producer's situation and their background, and it turns out he's a declared bankrupt.
Right.
So we advised the client to consider strongly to not go and invest in this particular production.
And also, returns are too good to be true. Another warning from me as well. I'm still
Favourite.
being used for a lot of crypto scams out there. You'll see my face, supposed comments from me. I'm part of a legal action against some of the platforms at the moment. No way am I recommending cryptocurrency. So be aware of that. Been going on for ages, but people get in contact with me who've lost $50,000, $200,000 on it.
Anything to do with crypto, I would avoid. I would not recommend crypto for my clients either. Now, plenty of people are investing in crypto, plenty of people are making money in crypto, but I don't think it's a particularly good investment to make. There are other areas where you can make good money.
If something looks a bit dodgy, ScamWatch should be your first port of call to see if it's on their list.
Correct.
Naomi, thanks for that. Great advice.
Thanks, Koshi.
Hi there, I'm Grady Wolf from Bell Direct, and here's our stock of the week. Well, Life360, the world's leading family safety tracking app, is anticipating yet another strong quarter of growth. Listed on the ASX, the California-based company is expected to report a 29% year-on-year revenue growth. That's reaching over $109 million. Its global user base is expanding rapidly. Monthly active users are up 26% to 88 million, while paid subscribers are growing by 24%. Despite increased sales and marketing spend, Life360 is maintaining its 2025 guidance. Founded in 2007 by CEO Chris Hulls, Life360 is transformed into a global hardware and software platform with over 2 million paying users and several revenue streams by expanding into home insurance, pet tracking, roadside assistance, medical assistance, and much more. Life360's resilient subscriber base and expansion into new markets puts it in a really good position for sustained success. Life360 is a solid buy for long-term investors.
Still to come on Your Money and Your Life, how do you make money in a falling share market? Welcome back to Your Money and Your Life. This year has been wild when it comes to share investing. Markets have been on a roller coaster ever since US President Donald Trump has come to office, as some of his policies have spooked financial markets on different days. Those massive gyrations cause a lot of angst among share investors. So how can you ease the tension, limit losses, or indeed make money in falling markets? Let's get in the mind of one of Australia's best fund managers, Junbei Liu, founder of 10Cap, and see what she does. Junbei, good to see you.
Good to see you.
Do you get spooked with all these gyrations like the rest of us?
Oh my goodness, I get so excited. I get so excited. It's the opportunity, you know. So we do two ways, because first of all, we can short companies. So I actually make money when share prices fall. So that's one big benefit. And at the same time, when the market volatility normally picks up, you know, wild ride, it provides a buying opportunity. You know, suddenly the things that good quality company we want to buy go on sale, 20-30% off. This is when you go and buy them. So, you know, we love this kind of environment because we find it's a great hunting ground.
Are there any stocks in wild markets that are more stable than others and can almost sort of be the foundation of your portfolio?
Absolutely. I think these are called the defensive quality names. Now, there's a few names you can name, but you know, a lot of times when market fall, you tend to see every stock falls. However, for the company that sort of hasn't really gone up as much, made that much money for the investors, they tend to fall a little bit less. First one is the Lottery Corp, TLC. That's a really interesting one. The company sell lotteries.
So they're your Powerball,
that's your Powerball
company.
That's right. And then the earnings so defensive year in, year out. You get that high single-digit growth, and it's very, very cheap. The reason it's cheap is because recently they had a pretty bad run. So the Powerball hasn't worked very well in their favor. So when luck happens that way, that means it will turn in the next 12 months.
Got a second one?
Second one is interesting. It's Cochlear. Yeah, so
Bionic ear.
That's right. And Cochlear, actually, share price hasn't really gone anywhere so far this year because they had a couple of earnings downgrade. And one of the reasons for downgrade is because they got this new processor coming through, which is very exciting. And we all know every time they launch a new processor, they will gain market share in a big way. But because everyone knows there's a new one coming, so people are not really installing the old one.
Right.
So you had a bit of earnings downgrade, so share price hasn't gone anywhere. And in our view, this is represent fantastic buying opportunity.
And the third one?
The third one, again, it's kind of a bottom fishing a little bit, but we think it will do very well in the next 12 months, is Metcash. Now, it's gone through, it had its tough times.
So it's IGA supermarkets, hardware stores, things like that.
That's
Bit of an alternative to Coles and Woolies.
That's right. It's the poor cousin of Coles and Woolworth. You know,
Right.
Coles share price hit all-time highs and the like, but Metcash has done so poorly because the independents sort of lost a bit of market share back to Coles and Woolworth because they gained so much share post-COVID. During COVID, remember, everyone was shopping in their suburbs, and so IGA gained a lot of share. Now sort of reversing a little bit. But what we're seeing in recent result is actually things getting a bit better. And then the Total Tools, which is a hardware business, looks like it's gone as bad as it can be, and they are started seeing green shoots. Again, it's very cheap, very defensive, very good to hold now.
Junbei Liu from TenCap, we love picking your brain. Thank you so much for joining us.
Thank you for having me. I love talking about this. Thank you.
Up next, the secret to asking for a pay rise. We hit the streets to find out. Home insurance premiums continue to rise. A big reason why is climate change. As the frequency of natural disasters increases, insurance companies are faced with greater risk and bigger payouts, and then have to pass on the costs. But experts say there are some ways to beat the price hike heat while keeping your home protected. From the Black Summer bushfires to the devastating Queensland and New South Wales floods. Extreme weather events are on the rise, and so too are our premiums. It's at renewal time when the shock sets in. Premium increases sometimes in the thousands. Climate change is a major driver. Inflation is also playing a part as the cost of rebuilding increases. Reinsurance is another factor.
We've had wild weather right around the world. All of these weather events do have an impact on premiums here at home. All of the insurers dip into the one funding pool to help spread out the risk of funding these claims, and it's called reinsurance.
Compare the Market tracks quote prices for a typical 4-bedroom home in Australia's 5 biggest cities. The average cost was up over 3% in the 6 months to June. Home insurance can cover the cost if your home is damaged and needs to be repaired or rebuilt. It's also often a requirement to get a mortgage. Here are fast ways to claw back some savings. Consider raising your excess payment. This can reduce your premiums if you can afford to pay more to make a claim. Buy insurance online. Many insurers offer a small discount when you purchase a new policy online. Pay your premium annually. It may be cheaper than monthly instalments. And shop around. Getting quotes from different providers every year is a great habit to get into.
Insurance companies are not going to do you a favour and tell you that there is a better deal available. You have to seek it out yourself. The good news is that comparison websites do make it really easy to shop around.
My advice, never take a price hike lying down. It pays to compare. In this week's Word on the Street, we asked, what's the best way to ask for a pay rise?
Have I ever asked for a pay rise? Well, not so much a pay rise. I've asked for a promotion, which inevitably did lead to a pay rise. I felt like I deserved it. I could prove that I've gone over and above.
I asked for a pay rise 2 months ago. What's the worst thing that can happen? You can either just don't get more money and stay on the same ride, or you can get out of the money. I'd always ask for a pay rise.
No, I wouldn't. I'm too scared.
I pay myself. I'm paid by the platforms as well, so if I want to increase my pay, I just got to have a conversation with the mirror.
I guess once you feel like you've been equipped with enough knowledge to be able to make a contribution to the company and feel like you can sort of run things by yourself, then I guess you have a bit of leverage to ask for that pay rise.
I don't think money should be a conversation that we shouldn't have. It shouldn't be a taboo topic.
I think it can come maybe yearly or half yearly for people that are doing like regular performance reviews, or potentially more often.
I have asked for a pay rise before. It's an interesting experience. I've only done it once before. I think it's important to push for the money that you think that you're worth.
I have asked for a pay rise. Anyone that doesn't ask for a pay rise, I've never heard of that. So yes, I've asked for a pay rise.
Been receiving yearly raises for the past several years. I just smiled and said, and they said, here's your raise. I'm like, okay.
Well, that's all from Your Money and Your Life for this season. Keep a lookout for our Facebook Live sessions where you can join me and an expert to answer your burning money questions. Like Your Money and Your Life on Facebook to keep up to date. And for the latest money and investment news you need 24/7, go to ymyl.com.au. While you're there, subscribe to my free newsletter, which gets delivered to your inbox every Friday. We'll see you next time.